Hey everyone, hope you guys are all having a good day here. Let's talk about Bitcoin because it's about to either have a massive breakout or a massive rejection. It's not going to really be much in between here. So as we look at the market today, not really much has been happening. You can see Bitcoin's only at 0.27% in the last 24 hours. There's been a lot of cooling off after that huge drop and somewhat of a rebound, and now we're kind of just staying flat here. And we'll be breaking down the technicals in a little bit here, but you can see the majority of stuff is really not moving too much. You have a few things right here like APT that's up like 9%, but the majority of stuff is up around 1 to 2% or down 1 to 2%, just flat here, waiting for Bitcoin to kind of lead the way going forward. I want to remind you guys that we do have the Ethereum spot ETF out right now. I know people have kind of forgotten about this because of how bad Bitcoin's been performing over the past few weeks and months, to be sure. But when we do get back on track, I do think Ethereum is going to have a lot of money flowing into it. And I do want to remind you guys, when we talk about Ethereum versus Bitcoin, we do know that Bitcoin is volatile, but so is Ethereum. And Ethereum only has a $313 billion market cap, while Bitcoin has over $1 trillion market cap. So you should see a lot more money flowing into Ethereum. At least that's my thoughts here, especially because people want to diversify those portfolios. And they all know Bitcoin can make some crazy moves. But I think after that 20% drop in a day for Ethereum, I think people can realize they can make a lot of money with Ethereum as well, especially if they are those long-term smart holders that we know a lot of the Wall Street cats are. Now, two things I wanted to talk to you guys about today before we get into the charts. Both of these are from Benjamin's Twitter network. So this one is Into the Macroverse. The second one is going to be from his main channel. But right now we have the Sam Rule Recession Indicator monthly percentage. And what I want you guys to focus on right now is just this little bit of a red chart right here. Usually every time we break above it, we're going into recession territory. That's basically what this means. And we're basically breaking above it right now. We will see if we go into recession. I am hearing a lot of you guys talking about this. I myself am talking about this. But of course, this whole post-COVID era has just been a lot of weird things happening. And on top of that, there's been a lot of media gaslighting. If you recall, we did have a recession back in 2022, back when we had the 2 negative quarters of GDP growth. And what happened? They said it was not a recession when it was. So keep an eye on this. I'm noticing it. I'm watching it. But right now, we're not in a recession. We may go back into one eventually here, but GDP is still positive. So it's going to take 2 new quarters for that to change, if you ask me, okay? Next up, we have Benjamin. Excuse me. This one's actually pretty interesting. If you look at Bitcoin market cycles as measured from the low, you can see we are in the same spot we are normally at this phase of the cycle. So if I click on this very fast, I know it's going to be a little bit more difficult to see. We are this little purple, pink perhaps, line. And you can see that we're still in the process of trying to go up to those all-time highs and that really crazy stuff here. And what I find kind of interesting about this is you can see how, like, historically how far we've gone. This is market cycle 3. This one's a really big one here. We're most likely looking at something like a market cycle 4. This is back in 2021. Market cycle 5. When I look at this, this makes me believe that not only can we hit $100,000, we might be able to hit up to $150,000 by the end of this peak. You guys know I've been looking at all these Fibonacci levels and stuff like that. And when I zoom out a little bit more, let's go over here to the monthly chart. You guys know that next level is at 104. After that, we're looking at something up here around 180. I'm expecting us to have the all-time highs where Bitcoin, peaks, and then we start to go back down for a bear market, crypto winters, all that stuff. In between this 104 zone to 175 zone, I'm no expert. I'm not even going to try to say exactly when this is going to happen. But the closer we get to these types of moves, I believe we will have more Fibonacci levels that can help us out. For example, if I were to open this one up right here, pop this up, you do see a little bit of resistance up here at 77. And you also see a little bit here at 159. I'm going to have to figure out the best way to try to figure this, define some type of good level of resistance, because it's going to be somewhere in here most likely, and it's going to be very, very, very difficult to spot at this point. So as we look at what's going on today in the market, the weekly's still bearish, all bearish in the weekly, nothing good about the weeklies. Daily, mostly bearish here, and we'll get it on this chart very fast, but mostly bearish here as well. The 4 hour, we see some hope, but also turning bearish, and the 1 hour is bearish on everything but the change of character itself. So we're kind of in a weird spot right now. If you were to ask me, it seems that on the daily charts, we're getting rejected right now from the 50, the 200, and the 20. They're all happening here, and we see a death cross. I would say that I would take the next few days to try to accumulate a small position on Bitcoin, and then let it rally up and try to approach between $64,000 and about $67,000. That'd be a good selling zone here. But because of the way everything's kind of turning bearish here, even look at the momentum, it kind of feels like I may want to take a few days for this to kind of play out. That's if you guys want to be very cautious. If you guys just want to open up a position and kind of let it ride, you can't open one up right now around 60,600. But I would just have my stop loss either at 56,000 or at 55,000. For me, 56,000 seems reasonable. I might even just put it right here at 57,500 and then wait to see if it's able to rally back up. I don't necessarily like this trade as much just because you have the daily and the weekly pulling you down. You have the 4 hour pushing you up, and then you have the 1 hour pushing you back down. So it's very inconsistent here. But what we're going to need to happen is some type of breakout, and that will usually get the momentum on our side. So one of the things we've been looking at over the past few days here is this breakout right there. And you guys can see we broke out, we hovered for 4 hours, and then we took off and we got rejected off the 200, and that was really good for the 4 hour chart. Well, at this point here, we do have another opportunity. Watch for a breakout happening right here. If you guys don't want to buy over the next couple of days, you guys don't want to just buy right now, wait for that breakout and then see if the oscillators are also matching, because if they are, you have an opportunity to ride this back up to 65,500. That's going to be the play here for the next few days. But until then, it's kind of a boring time here. And you're like, oh, why is it so boring? Because we just have these very volatile times here. And it's going to take a minute here for us to get back on that track. Well, you guys know I'm already coughing too much. So that's the end of this video. Thanks for watching, everybody. And make sure to watch again if you can. Thanks.